let's start, pre-Messari days. Why don't you say, how did you, originally kind of find your way to crypto?
So I first learned about Bitcoin in 2011 around the debt sequester. If everybody remembers that, when the S&P downgraded the U.S. debt, and it was pretty clear that the dollar was at some point going to lose its reserve currency status.
So what year?
2011.
2011.
I didn't get into Bitcoin. I heard about Bitcoin in 2011. And I really should have been one of those guys.
What were you doing at the time?
I was just left my venture capital role, and I was dabbling with some other startups. So kind of would have been a good time to get involved. But
was there a person who told you about it?
What's that?
Was there a person who told
you
about it?
No, actually, I found out about it online. Now, in subsequent versions, I had people that reminded me about it. But at the time, I played that trade the only way that you could fail, which was to short treasuries, buy gold, and to ignore Bitcoin. And if I had done the exact opposite of all three of those, I wouldn't be sitting here because I'd be retired right now. But such is life.
So you happy? Yeah, okay.
And obviously happy to be here tonight. So in between tonight and that fateful non-decision in 2011, I got into the industry full-time late 2013, joined Digital Currency Group as Director of Investments in 2014. We acquired,
how were you introduced?
I got to know everybody pretty much in short order from my writing because I broke the Mt. Gox story. So
oh, wow.
for better or for worse.
You broke the Mt. Gox story?
Yes.
How did you do that?
That was
wow.
my initial claim.
Was that the pinnacle? Has it all been done?
It's
that's awesome. Wow.
It was an experience. Yeah, I'll tell you that much. It was a very nerve-wracking 48 hours because I didn't have an editor, I didn't have a company. It was just kind of me that got my hands on these documents, and then I was able to authenticate them and confirm them. If anyone listens to Charlie Trump, his podcast, I'm going to give the full story in just a week or so. I promised him that I would.
By the way, Charlie's podcast is awesome. So
it is very good. And his podcast is called Untold Stories, which is why we're going to break that, because I finally got permission from my source to give the full story. But Charlie also helped me confirm this. I spent about 10 months just as an independent analyst. Joined Digital Currency Group as kind of the first Skunkworks hire when it was still second market.
How did you meet Barry?
Well, he was one of the people I reached out to when I was trying to confirm the documents. And so I first interacted with Barry in kind of early 2014, just from like going to on the conference circuit and meeting a bunch of people at the time. And it was pretty obvious to me what he was building out, and I said, I can help you here, here, and here. And he hired me within like 15 minutes, I think, because the industry was still very small at that point, and he'd been following my writing for a while. We raised a bunch of money, kind of built out the core team. And in late 2015, CoinDesk came up for sale. Actually, the day that we announced our investment in DCG, we met with the outgoing CoinDesk CEO, Jeremy Bonney, started to discuss the purchase of CoinDesk. I ran that.
Who owned it?
He was the former CEO. And bought the business in 2016. I led that restructuring for about 18 months before leaving mid-2017 after 10xing revenue, mostly from the Consensus conference business.
That's good business.
That is very good business, throws off a lot of cash, and it's got a great network and continues to be the premier event, so I'm very proud of what the teams continue to do. I left, though, because CoinDesk was very much a media and events brand and not a lot of tech, right? And there's a number of reasons for that I won't go into for short-form discussion. But once it became obvious that this asset class was going to be about more than just Bitcoin, it was also clear that there was going to be a quote-unquote Bloomberg for crypto. And I always say that in air quotes because every single fucking data entrepreneur in the industry labels their business like Bloomberg for crypto. But we tried to think from first principles and kind of go a layer deeper. Okay, everybody wants to build Bloomberg. If you want to build a platform, you have to build some useful analytics tools first. That's probably something more akin to, S&P market intelligence or CapIQ, if anyone here has ever interacted with CapIQ. And before you do that, you need Edgar, right? You need general accounting principles, you need standardized disclosures, and people need to be talking the same language when they refer to these assets. So we basically set out to build a decentralized Edgar data library for crypto assets. It's been most of our focus to date, and we're kind of in, I'd say, phase 1.5, where we're continuing to invest in that basic registry business, that disclosures business. but starting to offer additional professional tools now that the industry is maturing. There's a little bit more of an appetite for that.
And as you see the business today, what's the biggest thing that's different from when you started the company?
Well, most of the tourists are gone, so congratulations. I have more respect for you than if we had this conversation 2 years ago. I probably wouldn't have shown up, but it's good. I think the weekends got washed out. Most of the folks that are around now are genuinely interested in building things, not just flipping ICOs and trying to make a quick buck. So that's definitely a relief. Now, I've been through a couple of these cycles, so the way up is not that bad either. When everybody's getting wealthy and it just feels too easy. But at the same time, it was very disorienting. I actually did a very short stint right before starting Messari at Consensus, and that was at the peak. I was an entrepreneur in residence at Consensus here in Brooklyn, and it was interesting.
Did you have, what was your focus?
Well, I didn't have one.
Yeah.
I joined as an EIR, so I was helping a couple of the younger teams kind of think through their products and how they were going to come to market. And I joined and I basically said, I'm probably going to want to incubate an idea here. But I don't know exactly what I want to do. Fortunately, it only took me about a month or so to kind of pull the trigger on Messari. And I'm not saying that in a disparaging way. Just you have to imagine Consensus is the token center of the universe at that point. Got to from a couple hundred employees almost to 1,200 in short order, and things were just ripping, and it got very weird in some of the small conference rooms in Bushwick, because that office is not equipped for that many people. I'll tell you right now.
So personally, my take on crypto is, I really believe the community is the defining factor of crypto. That's why I do Crypto Mondays. And personally, from where I'm sitting, nobody does more for the crypto community than Consensus.
Yeah, I wouldn't disagree with that. I mean, I would make the argument that Ethereum isn't where it is today without Consensus. I mean, the whole bull run. I was fucking there,
yeah.
Right? And no, I'm not even talking about Consensus.
Yeah.
I'm talking about the Enterprise Ethereum Alliance announcement in February of that year. That to me was like the start of the bull run, because everybody that was in that room just kind of looked at each other. They're like, pretty much every major company is here. This is going to be big for Ethereum. I bought Ether. I kind of stayed away from it. I bought Ether at that event. It went up like 75%. And then it just
I'm not familiar with that event.
So this was in February of 2017.
And what was?
And the Enterprise Ethereum Alliance was an initiative that was spearheaded by Consensus, and basically getting, a private implementation of Ethereum that some of the big corporates could work with. Amber Balde from JP Morgan was very closely involved, and that became the Quorum project. But there was a lot of enterprise interest, at least in experimenting with some of these private chains using Ethereum smart contracts and similar logic. But it was a tremendous group of people that came together, and ostensibly the EEA was about bridging the public-private blockchain divide, which people might not remember, but for a couple of years during the kind of bear market, everything became like, oh, blockchain, not Bitcoin, right? And in many respects, I think the EA kind of brought things back a little bit.
Yeah, well, great for them. So, let's talk a little bit about...
We had a few more beers, we would just start doing a duet.
Let's talk about the slide behind you, the crypto thesis for 2020. Was there a crypto thesis? There was a crypto thesis for 2019. Can you talk about that a little bit?
Yeah, so I actually wrote the first one on January 1st of 2018. So it was right as I was launching Messari. And then I did one for 2019, and then the 2019 version, Arjun Balaji from Paradigm Capital now just totally shotgunned me and dropped his 2 days before mine was set to post. And he got all the attention and all the heat, and I paid him for it. So that's why this year's was a couple weeks before the holidays. And I'm sure next year's is going to be sometime around Thanksgiving, because it's going to be Christmas season. But it was one of those things where the team at Messari has really been kind of rocking and rolling, and I just went into a hole for a week to think about our 2020 strategy, and it's like, well, before I can really come up with a strategy, I got to figure out what the fuck is going on, because I've been in my hermit hole for too long. And then I came out the other side of that week with this 70-page monstrosity that my team helped me polish up. So
yeah, and it got, were you surprised by the response?
Honestly, no.
Yeah.
I mean, we knew that it would get picked up because we were early on in the cycle, and I'd written a couple of other ones, and we knew how they performed. But it definitely outperformed our expectations, I think. And it was just well marketed, so shout out to Kerner.
Yeah, and look, I mean, personally, there were 2020 outlooks. In fact, some that I participated in that I think yours resonated the most with the marketplace, and so that's what I want to spend the rest of the time that you and I, and then we'll open it up to questions. And a little bit is kind of doing a little bit of a lightning thing. So in Ryan's crypto thesis for 2020, just by hands, how many of you have read it out there? It's a pretty fair amount. You do pretty good.
Everybody else can leave. Homework assignment.
So there were like 10 categories where he said, the 10 things or the 20 things. And so I'm going to do a lightning round. I'm going to go category by category and ask him, as I assume he's going to remember, of the 10 or 20 things that he highlighted in that category, which is the thing, the most important thing. The next slide is going to be mine, so he'll say his, he'll say mine, but sometimes it'll be the same. If they're different, let's spur a little bit of dialogue, and then we'll move on. It's going to be very quick. So let's start. So what's the next slide?
It's hard to hear back here.
So we're going to do a speed round where we go through the 10 that out of the different top 10 sections. We go through my most contrarian and then yours, I guess.
Right. Well, it's the one that you want to talk about the most, and the one that I want, the one that I think is most impactful, and the one that you think is most impactful. And so we'll start for the first. I'm sorry. So when I talk, I'll take the microphone. And so the first category, and again, he's in Ryan's 2020 thesis. He had 10 of these categories. So this is the first one. Ryan will say the one that comes to his mind. I'll say the one that comes to my mind. You can actually go to the next slide, because the next slide, these are the 10 people that Ryan highlighted as most interesting. And now Ryan, of those, which in fact do you think is, what do you want to talk about?
So first of all, unless there's other clues on the other slides, it's going to be the point of the conversation where I'm like Will Ferrell in Old School, and I just say I blacked out. And I don't remember all the shit that I wrote. It's a lot of stuff.
So like you're running down the street naked now?
Yeah, exactly. So as long as you give me some clues like this one, I think we'll be. So this one was fun because I try to pick archetypes. So it's tough to pick just one. I'll try to pick a couple of the lesser known folks though. I'll cheat. So I'll do, well, you go first. That way it'll help me. That way it helps me narrow that. Just what name are you going to know? Just tell me the name and then you give your explanation.
For me?
Yeah, which one were you?
So, we give me a microphone because they can hear me. So you can go to the next slide.
No, boring.
No, but it's not fucking boring. Because the reason why is you have to understand, if you have not been there, how much time have you spent in Asia?
I've not spent that much time.
So the second time I was in Asia, CZ was keynoting the Asian Blockchain Summit, and actually, John, you want to raise your hand? With the Asian Blockchain Summit, it was an awesome fucking conference that CZ, and I got to tell you, I mean, I had heard the name CZ, oh my God, it was like watching Tony Robbins. I mean, I thought I was pumped before I saw him speak, and not only that, but then he came out. He was so incredibly well spoken, and then he came out and hung out for hours. And people were taking pictures of him, and he was there, and he was talking, and he was answering questions in a way that crypto is a totally different thing in Asia than it is here, and if you don't spend time there, you have no concept of that. And this is the guy leading that massive, massive charge. And I think, as amazing as you think, I agree, right? He's the obvious choice, but he's the obvious choice for a really, really, really good reason.
Okay, so I'll do the non-obvious choice then, and that's Morgan Beller at Facebook. So everybody knows about David Marcus, former PayPal CEO. This young woman, Morgan Beller, who is a former Andreessen Horowitz associate, is really kind of the driving force behind all of Facebook's crypto work. She kind of took the bull by the horns in early 2017, and when the group actually got spun up, it was David Marcus and a few of the other kind of senior folks coming over and kind of agreeing that they should rally around this. So I kind of view her as like the canary in the coal mine for how Libra's actually doing. And if she ever left Facebook, it'd be like, okay, they're totally backing out of this. I don't think that's going to happen. But most of the folks that are within the industry and running companies or projects know who Morgan is and know how much of a driving force she is behind a lot.
So interesting. How many people here know who Morgan is? Yeah, I gotta say, I did not know who she was. Yeah, I did not know who she was. Yeah, there were two people. Now I forget who's the guy, the fourth guy.
Oh, that's Brian Klein. He's a defense attorney that's represented the Brightmans. He was picked up.
Who I'm actually a big fan of.
By the what was the guy that just got arrested in North Korea? He's representing him now. He's the one. He's the one that got Block One off for like a slap on the wrist, $24 million settlement. So he's like,
they paid more for a domain name.
he's a high. I think he's branded himself as a high stakes litigation attorney.
That's interesting. Okay, super interesting. So, okay, so let's go on to the next. This is supposed to be lightning. So, top 10 narratives. Do you remember any of them?
I do remember most of these. So by far the one that's most important to me is what I view as kind of the critical narrative that everybody should be rallying around. Whether you're in like Ether or some other asset, it doesn't really matter. It's this whole concept of the digital gold basket and rotation. And I think one of the biggest issues in the industry right now is that everybody talks about digital gold, but they do so in a way where gold bugs just totally write it off because they look at the price gyrations and they're like, this isn't a store of value, it's got no history, it's got no this. They basically focus on all the things that Bitcoin does not have. But if you think about Bitcoin and gold together as part of the same basket, well, if you're into gold, you should probably have a little bit of Bitcoin because the younger demographics like digital gold a hell of a lot more than they like physical gold, but they like both for the same reasons that maybe the older, wealthier generations do. So I kind of view this as just like a generational rotation and a tidal wave of kind of long-term assets that could come into the industry, which ultimately would help every single project and protocol that's being invested in today. So yeah, so there's mine. Which was yours? I think this, right. I think this might be a little, so this is slightly different, at least in terms of, I think it's kind of the same thing. But this one was more that we shouldn't be thinking about Bitcoin as a replacement for money, and instead thinking about it as a replacement for gold. So it's kind of like, there were two separate ones. Okay. The one that I mentioned is more thinking about gold and digital gold not as enemies, but as kind of perfect complements. Because if you net them together, they're actually not that volatile. They respond to macro news the way that you'd expect them to. But this one is part of that thesis as well. Yeah, and look, for me, I'm totally bought off on the digital gold value, but I'm also, of the what Bitcoin can be, right? We're at the, I don't even think we've started yet. I think we'll look back and wow, we hadn't even started yet. So what Bitcoin can be, the possibilities, are infinite. So your top 20 takes actually broke into two. So the first of your top 20 take is the 20 coins. Yes. Right. So you did 20 coins, which is, I got to say, kudos to you for going out there and say, hey, here are my 20 coins. Right. Mm-hmm. I'm sure you took a fucking lot of heat from the coins that weren't there. But you put it out there. Now I'm asking you even to do far more of that of the 20, which is the one. Which is the one that's most interesting, or which was of one the 20 you had on the list? Do you want people to know about that they don't know about? Well, I mean, I've been there's this weird line that I try not to cross between like shilling tokens based on the business that is Messari, and also Disclosing my
disclosing
my portfolio is easy, but it's also a form of shilling because there's only 3 assets in it: a Bitcoin, ETH, and Zcash. So everybody knows Bitcoin and Ether. So I guess by definition, I'd have to talk about Zcash. I like Zcash for philosophical reasons because I think that the privacy innovations that team has been able to drive forward with the capital that they've raised has just been tremendous. And you're seeing some of that research find its way into Ethereum, into Tezos, into many other protocols. But more importantly, I view Zcash as, I know I just used this term for Morgan, but another canary in the coal mine, right? As Zcash goes, so goes crypto privacy, and ultimately fungibility, because the regulators allow Bitcoin to exist right now. Let's not mistake ourselves. They allow it to exist right now because there are companies like Chainalysis and Elliptic that can trace illicit transactions and dark web activity. That's going to get tougher to do, and in part is going to get tougher to do because of privacy coins. Now, flip side is, you can't actually have enterprise crypto if JP Morgan's customer transactions are happening on a public blockchain, right? So how do you solve for this? Zcash has the concept of T addresses and Z addresses, transparent versus ultimately shielded. And right now, T addresses are the vast majority of transactions. But I believe that over time, they're maybe the most likely. You could argue maybe Bitcoin or some pockets of Ethereum transactions become equally private. But in terms of privacy by default, I think Zcash is the most likely to kind of usher in that era of truly private censor-resistant commerce. And there are ways to prevent illicit actors from exploiting the system and just driving a bunch of money to Iran or through sanctions. And the answer is pretty simple. You regulate the edges because people are always going to need to transact in and out of exchanges, whether or not the actual on-chain transactions are private, which hopefully they are.
Yeah, I mean, look, the work that Zuko is doing is obviously so awesome. That said, so these are the 20 coins, just real quick. So if you turn around, you can remember. And then, so here's the coin that I wanted to bring up, which you actually mentioned. Is the next slide? Yeah, Tezos. And it's funny, and I think, look, I think the crypto is infinite. The impact it's going to have, and so when we all see it, we all see something different based on the prism we're looking at it at. And when I looked at it, one of the major things I saw was community and the importance of community to crypto. And in my experience in the 2.5 years, I've been 24/7. There's an amazing community around Bitcoin. There's an amazing community around Ethereum, and the only and there are certainly some other good communities. But by a wide margin, the third that I've seen that's most impressive is Tezos, and the people that are involved in the Tezos community for what Tezos is standing for, and what they're doing, and now they're a home for security tokens, because of how they've designed it. So I think it's largely it's a combination of the technology and the community that makes me incredibly bullish. You said you own 3, I own 2, Bitcoin and Tezos.
I will say, I don't really believe in communities that haven't been through bear markets. Bitcoin's done that. Ethereum has done that. Several of the top 20 coins have, but some of these assets that have basically just been on a straight shot north, you don't really know anything about their community. It's just a bunch of people that made money, so now they're promoting.
I don't know. T-Quorum was like 3 or 4 months ago. We're like, a year and a half into a bear market.
Yeah, but Tezos is not in a bear market. Tezos have performed very well. I think I agree with you. I'm
okay. That's
excited.
fair, but why have they performed well?
Well, part of it is the staking economics of the system, right? If you force people to lock up more and more of the float, it is a velocity suck on the asset, and fewer people have the ability or interest to sell it because they think that they can earn yield on it, and really yield is just a taxable stock dividend, which is a really awful form of transaction.
But just
this
hold on a minute.
This is true with all staking.
So by the way, like I gotta say, so the T-Quorum was awesome. So we actually Arthur came, and I had the chance to talk to him
at a Crypto Monday during T Quorum when it was in New York a couple months ago. And I got to tell you, I was so impressed by him. And the most interesting thing that he talked about was this idea of, instead of, as you were talking about, all right, it's incredibly stupid, right, to give people staking rewards, taxable, blah, blah, blah. But what's not taxable is, and then what you can take a loss on is the other side, is slashing. So they're going to slash the non-stakers, and then they can take a loss, right? So now they're going to fuck the government.
I guess, yeah.
Yeah. Well, again,
I like those. I like that team. I like the community. I'm not disparaging them, but it's like, how much do you really know about yourself if you've never been in a fight?
Yeah.
Right.
Hard to argue with that. Okay, next. Next. Top 20 takes. Oh, sorry. Go back. And then the other one was like you had 9 other takes, other than the top 20 coins.
I may have actually had 20 in this section because this.
You might have had 20, yes.
Not
yes, top 20 takes. That's what it said. Yeah. So the first one was 20 coins, and then there were 19 others.
Connor, can you pull this shit up? Like,
and that's fine. I'll tell you mine.
I'm just trying to narrow it down. Go.
And obviously, because I'm talking my book, and they were just crypto funds. So it's just incredibly interesting, just in terms of from my perspective.
The context clues, man.
Yeah. Yes. It's okay. Go on. Move to the next one. So we're going to get through infrastructure trends. Remember any of these?
Well, I remember most of the theses if I can kind of walk through them one at a time. But in terms of infrastructure.
And by the way, just to be fair, I sent him an email this morning. Told him that we were going to do this. So it's not like I'm springing it on. I'm just
Well, I didn't have time to memorize all of the 20. I thought that there would be cliff notes or something, so I should have had it on my phone. It's all good. In terms of infrastructure trends, I think far and away the biggest one is just that crypto M&A is just getting started. That's at the protocol level and at the exchange level, right? The exchanges have all the money. There's basically there's 3 models in crypto. One, you raise an ICO. That's kind of going by the wayside. 2 is you have transaction fees, and 3 is you sell to exchanges. You sell some service to exchanges. Those are like the only 3 economic models that really work in crypto. And then like maybe one mining conglomerate makes money.
DeFi?
Yeah, maybe, right? But right now, that they're not actually making money. They're raising venture capital. They're not making money. So we'll see. Of course, like
they're building markets. I think
they're building markets, but the economics don't make any sense. The promotional like teaser rates are the equivalent of adjustable rate mortgages, because you can't make the economics work with how some of these companies are offering lending rates versus borrow. But that's a totally different conversation. The end state is still that exchanges make all the rules, they have all the money, and ultimately, you've seen this play out with Kraken, Coinbase, Binance. Getting increasingly acquisitive over time, and that's something that I think will only continue. The more interesting
or about
one.
What happened with Circle? Going
well,
the other way. Yeah.
Well, everything's still getting acquired. They're just getting acquired by different people. Right? So,
well, divesting. Circle is divesting.
Yeah. Sure. Yeah, but someone else is on the other side of these transactions. The other element that I think is going to be fascinating to watch is the concept of protocol M&A. So we've started to see. At least precedents for this, where teams merge. They might be able to do atomic swaps for the assets. DigixDAO, very high-profile example where they just voted to basically explode the protocol and return ETH to all the Digix holders pro rata. So there's going to be a lot of interesting kind of line downs.
And I saw that, but there was not. I couldn't see what did that do for the investor? Did they make money? Did they lose money?
Well, I think if it ultimately goes through, they're going to make a decent amount of money because Digix DAO tokens were trading at a discount to the ETH that was in their treasury. So I think there's a couple of other projects that are like that. But if the assumption is you're basically just going to set this money on fire and not drive any value back to the protocol tokens, then it makes sense, especially if it is a decentralized governance mechanism that people would vote to get the ETH because it's a good trade.
Okay, let's move along. So I talked about governance, but go on. We can go to the next one. Bitcoin trends.
Bitcoin trends.
The halving as a self-fulfilling prophecy.
The halving is self. Thank you, Connor. See, he knows. He's just going to pick them at random, and I can. Like,
Connor, you want to come? You can go. Thank you, Ryan. Let's give him a big hand.
So Connor's the one that actually marketed the shit out of this, and our email list grew 60% from this one project that we did. So we like Connor. So the halving as a self-fulfilling prophecy. So there's kind of two schools of thought right now. One is that, you know, if you follow the efficient market hypothesis.
But how many here know what the halvening is?
It's coming.
Yeah. It's coming in May.
Yeah,
About
maybe 60%. Yeah.
Probably going to come around right around consensus in May, which should be interesting. There's a school of efficient market hypotheses gurus or armchair economists that are absolutely convinced that the halving is already priced in, as are all subsequent halvings, as are all inflationary events in every single crypto asset protocol. And that assumes, I think, a hell of a lot more average economic understanding and awareness than actually exists for most crypto investors.
So you're of the P.T. Barnum belief that nobody ever lost money underestimating the intelligence of the average American.
Certainly for assets not named Bitcoin, right?
Yeah.
For the long tail of assets, it's just an awareness issue, and you know, most people just aren't paying attention, right? So even for Bitcoin,
unless I assume it's a pendulum. Everything's a pendulum at some point, right? They're not, and they're not, and they're not. I mean, at some point, they'll be anticipating it too much.
Yeah, I mean,
I think by definition.
People are,
and maybe we're far away from that. I have no idea.
Yeah.
Because this is like my first halvening. So like, and all the time I've been here. When was the last halvening? Maybe I've been when it wasn't even.
2016. Right?
Yeah. So I got here June in 17. This is my first one.
Yeah. So let's separate Bitcoin and everything else, right? There's everything else which I think there's a lack of awareness of. With Bitcoin, there's certainly not a lack of awareness when it comes to this upcoming halving. And even if there is a lack of awareness, the people that are aware have 10x the money and liquidity. So it's a rush. Where I think it matters, though, is that every single time there's a halving, it kind of hardens the digital gold narrative. And this is the first time that Bitcoin's issuance rate will fall below the target inflation rate for the Fed, under 2% at this coming halving. So that is a pretty powerful signal to the market that this is a store of value asset, or at least a speculative store of value, if you'll indulge me with that, you know, contradiction in terms. And ultimately, I think that as that, you know, rate gets lower and lower, you know, you're going to start to see people look around and say, well, the supply of gold increases 1% per year, so Bitcoin is actually getting better than gold in the long term, especially if you extrapolate it out, you know, 5-10 years. That, I think, is not only a powerful narrative and reinforcement, but the fact that it's a halving and not just a steady decline almost works like, you know, I built consensus before getting into Messari, right? Every single time you would hike prices before an event, the lead up to that price hike was, without fail, the hottest time that you could sell tickets. Didn't matter when it was, like you'd have everybody piling in right before the deadline to buy their ticket the last possible second before they had to pay the next year. And then the next day, it would drop off a cliff until the next one, right? So I do think that there's something to that subconscious catalyst for the Bitcoin halving that people might underestimate, even though, yes, everybody knows that the halvings are coming and over what schedule they transpire.
Yeah, so on the Bitcoin trends, obviously I put the halving in as well, because it really is the dominating narrative at the moment. And, you know, from my perspective, it's hard to know what is going to make the world wake up and see it. You know, I happened to be there for a moment in video when somebody uploaded a video called Lazy Sunday onto a website that had a couple 100,000 people on it, and that day that website became the fastest growing website in the history of the web up to that moment, and that was YouTube, right? And so these are random events that happen that are catalysts. It's lightning in a bottle. What's going to be the lightning in the bottle for the world to see what we all see here in this room about Bitcoin? The next potential one is the halving. So,
all right, I don't need notes for this next one. ETH is money. That was the kind of key theme. So I like the ETH is money meme. in the Ethereum ecosystem, and it's because it's true, right? So you can think about Bitcoin, or at least I think about Bitcoin as the reserve currency of a distributed central bank. ETH is the reserve currency for a distributed investment bank. The killer app was IEOs, ICOs. It was the reserve currency. You had to hold ETH if you wanted to get in on some of these opportunities in 2017. Now that shifted a little bit. Now it's DeFi, right? So you need ETH if you're going to participate in this lending economy, if you're going to participate and actually leverage on-chain derivatives, blah, blah, blah. What's interesting is the ETH is money narrative could fall by the wayside if there's any stable coins that really get traction. But this transition is going to happen at the same time that Ethereum transitions to proof of stake, which is going to lock up a bunch of assets, and people are going to make a flock to actually stake their ETH so they don't get diluted down, or so that they can earn these ephemeral staking rewards. So I'm very bullish on ETH as an asset. I think the open question for Ethereum is how they actually manage this transition to proof of stake, and if they do, because it's considered a foregone conclusion. But I've been around for a while, so I know how many missed deadlines the Ethereum developer ecosystem has had, and that's not a knock on them because what they've built is incredible, but they're just not very good at forecasting or budgeting for developer cycles.
Not traditionally. Go to mine.
IMEX consensus, which we have already kind of talked about. So let me just ask you then, in terms of stable coins, what are your thoughts on DAI?
I really like DAI because it's the one thing that is censor resistant. You look at Tether, it's unclear when those funds will ever be seized or unseized. With USDC and some of the other centralized alternatives, again, if you screw around, you're kind of at the mercy of the banks that are actually custodying assets on behalf of Circle and Coinbase. It's a regulated stablecoin. It's not great if you're a dissident. DAI is fascinating. I'm shocked that it survived a 90% downdraft in the price of ETH.
It's pretty impressive, right? I mean, Jesus Christ.
I always pay attention to things that don't die when they should.
Yes.
Right. That's
happened
to Bitcoin. It's happened to DAI. It's
yeah.
happened to Ether, and I'm sure there are going to be other examples of it. Now, the corollary to that is I almost look for anything that's hyped to have its real catastrophic flaw, so that people can get scared, run away for a couple of years, and then kind of come back. This happened with DAOs, and now the concept of DAOs are maybe one of the sexiest concepts, and maybe I'll talk a little bit more about that in a subsequent section. But
DeFi trends?
DAOs are great.
I just said personally the idea of decentralized liquidity. And people, more than 99.9% of all U.S. equities didn't trade today, right? So this idea that you can become public and then, or you can have an ICO, we have to be able to create liquidity. And part of the reasons why our public markets are in decline is because there is no liquidity, because people can no longer make any money providing liquidity to the markets. And now we have found a way for algorithmic, decentralized liquidity. My belief is the thing that's going to make crypto go mainstream is when there's something you can get in crypto that you can't get anyplace else.
I agree. If there was a like-kind exemption when it comes to taxes for anything that you trade on DEXs, I think pretty much anything that's available on Uniswap would skyrocket overnight. But that's not going to happen.
No. Web3 trends?
Pass.
Okay, what did I say?
No, Connor, what's a good one?
Brave.
Brave? Brave. Great company, great founder. I always get excited about applications that have real world users because you can't fork audience and community, to your point, right? So we can argue about the quality of community, but if you have a quality of engaged regular users, you can offer them crypto, right? This is what I think people get wrong about Facebook and Telegram. And like, if they can actually launch these things, they're going to be massive because they already have the captive audience. So I like Brave because they know what they're building from a product standpoint, and you know, it's now my default browser. I recommend it to anyone else here.
How many guys here uses Brave?
Great, awesome.
Okay, like 5% maybe.
Now, having said that, total disclaimer.
And by the way, I'm shocked it was that high.
Yeah, I am too. Total disclaimer that the Brave browser has nothing to do with the basic attention token right now, but it could in the future. So who knows what that means for the token. I don't own it, I don't vouch for it, but I'm fascinated by any company that is at least thinking about how it might be able to decentralize itself over time through a token, particularly the information businesses.
Yeah, and I think what Brave is doing is amazing, and Brave actually has meaningful traction, right? 10 million, how many DAUs? I mean, it's got, the unfortunate thing is, it's in a market with billions, so as a percentage, it's 0.00, and so it's personally like more easier to get excited about things that don't actually really exist at scale, so they can be any percentage quickly, and those are NFTs for many. I think that that communities need to be incentivized, and incentives, the majority of them are going to be non-cash, and I think NFTs are going to be a massive part of that ecosystem. There's a great conference coming up. Did you go last year to NFT.NYC?
I did, and I think someone from the team did.
Yeah, I got to tell you, it's an awesome conference. I highly recommend it. I think NFTs are a thing.
We're going to have to actually go lightning because I know that people are starting to get a little antsy.
Go. You can go to the end.
Stablecoins ready.
Go.
Policy
Okay.
trends, boring.
Go. Q&A. Couple questions from the audience before we... Anybody going once? Come on, guys. Gotta be some questions.
Around Zcash, there's a vote within the community next week, actually tomorrow, to decide how they're actually going to fund the development. Do you have any opinions around that, or any insight into that? Or
as far as I know right now, out of the proposals that have been laid out, there's not much controversy around the foundation and Electric Coin Company's proposal to take some of the ongoing issuance and put it into either community development funds, Zcash, Foundation, Electric Coin Company. I think the only real argument right now, or the only contention that the detail has to be fleshed out, is what the exact split is. But it seems as though a 20% haircut to the miners in favor of the developer teams is not only going to pass, but it's probably going to be something that the mining community is excited about. Because if you're a miner and you want to continue to mine on Zcash, it needs to stop plummeting in value. And the fastest way that it will stop plummeting in value is if the core teams don't just leave and work on other things. So I won't give my opinion on what the right split is, though, because it starts to get into murky territory.
So over the next year or 2 years, there's a bunch of new token platforms that are going to be launched. What's your take on them? Does the world need another 10 smart contract platforms? Are any of them going to survive?
The world probably doesn't need...
Wait, repeat the question.
Yeah, so the question was, does the world need more smart contract platforms? And the answer is no, but with a pretty major caveat, which is it's unclear whether Ethereum is the winner, right? It's going to be hard to displace Ethereum just because of its network effects and the developer ecosystem, but if it becomes easier and these protocols do truly become interoperable, then there's nothing that locks in developers and some of these different applications to a given stack, in theory at least. Now in practice, over what time period that plays out is unclear. Shame on me, this is why I stayed away from Ethereum for so long to begin with. I'm still not sure that that's the wrong long-term narrative, that basically you're only going to have money-like assets and platform tokens don't matter. But it was certainly wrong for a while, and I think for the medium term, it's going to continue to be true that all the platforms that have any meaningful pickup will need tokens that have value that secure the rest of the network.
Okay, let's give Brian a really big hand. He was awesome.
Brian, you're not going to pitch your company?
What's that?
You're not going to pitch your company?
You want to go? I'm sorry. Go. Do we have a last slide with the?
I don't think we put the code. Do you have the code? Crypto Mondays. Crypto Monday.
Yeah.
Monday, Connor?
So let me just add, so Ryan's been kind enough, if you want to get their pro product, and you can use the word, the discount code Crypto Mondays to get 20% off on Messari.
Monday.
Crypto Monday 20.
No, Crypto Monday, not plural.
Crypto Monday.
Okay.
Crypto Monday, not plural. So, thanks, Ryan.
Thank you.